Agreed, and I want to point out that differential, as you point out, between the Dow and the Nasdaq is 150 basis point, 1.5%. That's a lot for one day, as you know. That rotation is vicious, and I think it points to your question. We're going to get some chop here. I'd be shocked if the market went straight up and made a new high, but perhaps the lows of last Monday will hold, and we'll just kind of bounce around, and what happens inside the market will be more the interesting story.
You know, there had been some discussion last week, Bob. You look at like some of the consumer comfort indexes, the average of jobless claims over 4 weeks, the city surprise index, that there's food there, some argue, for a next leg in the bull run going into a seasonally strong part of the year. You got a problem with that?
No, I don't have a problem, but I don't think it's just yet. I think we've got to digest slowing economy and earnings. We got to digest the fact that interest rates have started back up. We've got to digest that Washington is having a chaos in terms of fiscal policy. And, the interest rate effect is not good for long duration, high PE stocks. So I think along with the positives of still a good economy and good earnings, despite it slowing, the fact the Fed is, still front and center, the old teen argument, there's no alternative. So I'm saying the positives are still there, Carl, but there's some negatives that have crept in that cause me to say I think it's choppy or not straight up.
The interest rate effect, Bob, I mean, what is your outlook going into 2022, for example, for yields?
Morgan, I think up. Look, markets tend not to move unidimensionally. This interest rate picture is 2 steps forward, 1 step back. We hit the low at the pandemic of roughly 50 basis points on the 10-year. We moved to 175. We moved back to 125. Notice a higher low. And I think this move will take us above 175 toward 2 into next year as the market adjusts to the economy's okay and inflation is not all transitory.
So if inflation's not all transitory, I mean, I realize maybe 5% inflation is not sustainable over the longer term, but you have a Fed that's poised to begin to taper. With that being said, is it still behind the ball potentially as you go into 2022, especially when you do see stocks at valuations like this?
I think the Fed is probably going to end up being surprised how sticky inflation is. I agree it's not going to stay at 5, and that's going to be the conundrum next year as the inflation rate falls. People will think, don't worry about inflation. But when the dust settles, I think it's going to be closer to 3 than sub 2, where we were for so long.